because they're likely to have things in common. And the better you understand their pain points, the better you can craft a solution to meet those pain points. I mean, that's what we all want. We want people who will help us solve our problems and make our lives easier. Hi everyone, it's Tina with Picture It Profit and Financials. And today I want to speak with you about financial statements, or rather financial reports. So you guys know that I am all about helping business owners manage their money better. And a big part of that is understanding a few aspects of your business that don't necessarily become revealed with your balance sheet, your profit and loss, and your statement of cash flows. Those three reports that I just named are your core financial statements, and each of those you should be looking at on a monthly basis. However, there are a few other reports that are worth looking at on a monthly basis as well. And so I'm going to talk about three of those reports today and why they are so darn important. The first report I want to talk about is the AR Aging Summary Report. AR stands for Accounts Receivables, and really what this is talking about is the money that other people owe you. So this would be the invoices that you have sent out to folks, but they have not actually paid you yet. One of the reasons it's so important to understand what's going on with your accounts receivable, or those invoices that people owe you, is that it's going to help you with your cash flow. You guys hear me talking all the time about the importance of knowing how much money you have on hand and where your money is coming from, and also what bills you have coming up. Accounts receivable is going to handle the incoming money part of that. Sometimes I work with clients and they have invoices that they either haven't billed for yet, which this is extremely common. They haven't sent their invoices out for work they have already rendered, or they've sent out their invoice and have zero follow-up process. So they're sort of winging it on when they reach out to other people or when they reach out to their clients to receive the money that's owed to them. This is a big problem. And so first and foremost, if you are the person who is struggling to get their invoices out, absolutely, positively must schedule yourself time to do this and honor that time on your schedule. Please make sure that you are scheduling some administrative time to get those invoices out. I mean, it's great to have admin time to do other work in your business as well, but absolutely, most importantly, is you have to get paid for the work that you've done. So if you do not already have a set time for scheduling or sending out the invoices that people owe you, that's task number one. Like, stop everything else and do that. Once you have invoices outstanding, you'll have some terms that you put in the invoice, and the terms will typically look like how many days they have to pay you. So in accounting language, that'll be like net 7 or net 15 or net 30. That means that you send the invoice on day 1, and if it's net 15, that means it's due on, day 15. They have 15 days to pay it. So it's a difference of when you have the creation of the invoice versus when the invoice is due. In the accounts receivable report, you're going to see some columns. Those columns are going to tell you how many invoices you have outstanding that are current. That means they have not passed the due date yet. And then you're going to have a column that says, invoices that are overdue by 1 to 30 days, then 31 to 60 days, 60 to 61 days to 90 days, or older than 91 days. If you have invoices in any of these other categories, you need to develop a process for collecting on your invoices. This would be a follow-up process. Now, I have worked with clients in the past, and one of the things we realize is sometimes the collections process starts when you're creating the invoice. So for example, with one of my clients, we established a process of when they created the invoice, not just writing into the engagement letter how their invoices work, this portion of it would be a deposit, this portion would come later on, but actually expressing verbally when they go over the engagement letter what the process is, expressing it again verbally when they send the first invoice and in writing, and then at the time that they are to collect the final payment, again expressing that both in writing and verbally. Even with all of that, this client had to still chase a few people to receive payment. And I'll be honest, if it's possible for you to work with somebody who's willing to play along, you can do the good cop, bad cop thing. We did this with one of my clients. That sounds funny, but yes, we did this with one of his clients where he was able to say, hey, I see this invoice is outstanding. My bookkeeper is giving me a lot of pressure to collect on this money so that she can further work on my cash flow analysis. Can you please send this? And so he was able to use me as the bad cop, and he was at the good cop, like, sorry to ask you this, but I'm trying to get this other person off my back. Can you help a guy out? And the client of his ended up paying within a week. So just to let you know a couple things from that example. One, having a good payment procedure and being able to verbalize that right from the get-go is extremely important. But then also using your report to understand who is overdue the longest, and whether or not you need to refine the terms of your invoice, so maybe make them due upon receipt or give them a shorter window of opportunity to pay the invoice, or if you need to work with somebody like a bookkeeper to track that for you and even send out some of those messages on your behalf. Okay. So that was the accounts receivable aging summary report and why it's so important. The next report that I want to talk about is the sales by customer summary report. It's always, I get a little tongue twisted when I say these all out, but the sales by customer summary report is so valuable because it's going to tell you who are the people that are paying you the most money. And a lot of us who take marketing classes and want to improve our marketing, we always talk about who is my ideal client avatar? Who is my avatar? Who's my ideal client? And the truth is, I will say this every time, your ideal client is always going to be the one who pays you. So if you have somebody who is paying you a lot of money consistently, what can you find out about them? Better yet, if you have several people in that position, what can you find out about all of them? When you can understand who are the people that are consistent users of your service, you can start to understand what do they have in common, right? So if I have, say, 5 people who make up a good portion, or they're like way ahead of everybody else in this report in terms of how much they've spent with me, then I can find out what are their commonalities. I can find out things about their businesses. What are the common things about their business? Are they all service providers? Are they all photographers? Are they all digital artists? Are they all of a creative knack? Are they all visionaries who just absolutely need somebody to do the tactical legwork for them? What are the things that they all have in common? And then you can also, as you get to know them better, find out things personally about them. Like, do they typically have children? Do they typically have pets? Are they cat people or dog people? If you can find commonalities like that, then you can become even more clear in the way that you speak to them, and that you can use language and examples that really resonate with them. And to take that even a step further, I'm going to tell you guys about something that I learned while I was still in corporate. And that is to, if it's possible for you, if you're all in the same place, consider having a customer advisory session or creating a customer advisory group. This is something that vendors would do with me back when I was in my corporate setting, and I loved it for a few reasons. One, I was able to air any grievances I had with the vendor, which hopefully your clients won't be doing that to you. But I was able to ask them questions about their products or explain bugs in their products that I wasn't pleased with, and ask for them to give me some insight into when that could all be repaired. But on top of that, I was able to talk about the way that I'm using their product, and I was able to do that in a setting with other people who are also using their product. So they were getting tremendous value out of me. They were learning from me what it is, how I use them and why I use them and how it's working for me and how it's not working for me. This is all valuable information. But on top of that, it was creating a sort of mastermind experience between me and their other clients, right? They were getting this feedback from me and at the same time getting it from, let's say, 15 other people. Now, this was a pretty large vendor, and they were able to take us all out to a catered lunch to do this in a conference room. But let's say you have maybe 5 clients or even just 4 clients that really stand out. Is there a way that you could bring them together to kind of brainstorm with one another on how you could serve them better and to better understand what their pain points are? Because they're likely to have things in common, and the better you understand their pain points, the better you can craft a solution to meet those pain points. I mean, that's what we all want. We want people who will help us solve our problems and make our lives easier. Okay, so again, that was the customer sales summary report. And again, you're looking for those people who are outliers. What do they have in common? And if possible, can you bring them together to offer them an experience where they can mastermind with one another and you can glean all sorts of valuable information from them. Okay, guys, the last report that I want to bring up is called the AP Aging Summary Report. So just like AR stands for accounts receivable, you have AP standing for accounts payable. Accounts payable is the bills that you have outstanding. And what's really important about this report is, again, it's going to help you understand how are you managing your cash flow. One of the things that I like to remind my clients of is that even if my clients are the kind of people who send things out that are due upon receipt, you might have other vendors who are going to give you that 15 days or that 30 days grace to pay something. And it's wonderful if you have ample cushion in your accounts. And that's one of the things I work with my clients to build up for them. I want them to be able to pay their bills right as they come in. I want them to have ample cash in their business that they don't have to worry about timing it out. But some of us are still in that position where we do have to be really strategic about when we pay which bills, because we want to make sure that we're still paying ourselves consistently, paying our staff consistently. And so when you have a lot of competing expenses, it's important to know which bills you can pay right now, which bills you want to pay in 15 days, which bills you want to pay in 30 days, and heck, there are even some vendors that will give you 60 days. So if you are paying attention to when your due date is, you can better create a cash flow budget to help you pay those things right in the right time and conserve cash on hand for in case any sort of, mishaps or great ideas come up along the way. All right, guys, those are the 3 reports that I want to talk to you about. They are not the same as your financial statements. Remember, the core financial statements that you should absolutely be looking at every month are your balance sheet, which tells you the net worth of your company, your profit and loss or income statement, which tells you whether or not your company is actually making money, and then your statement of cash flows or a cash flow forecast, which will tell you how much cash you have on hand and what you're expecting to spend it on in the near future. Then in addition to that, I want you to start looking at these 3 additional reports. Those are going to be your accounts receivable or AR summary report, your accounts payable aging summary report, and then lastly, the sales by customer summary report so that you can glean such valuable information. All right, guys, I hope you're having a wonderful fall season. I will see you in the next video. Bye.